Lithium Americas Corp., ticker LAC, is currently trading at $6.72, seeing a significant intraday lift of $0.24, which translates to a 3.70% gain on the day. Now, seeing that green percentage on your Robinhood app or Fidelity mobile app feels good, especially in a sector that has been under pressure. The immediate reaction, the general expectation, is that this is the market finally waking up to the lithium shortage, or perhaps that the electric vehicle demand from companies like Tesla is pulling all adjacent investments up with it. It's easy to look at a 3.70% jump and think the hard part is over and the recovery is beginning. But the reality of this specific stock, the new Lithium Americas, is far more complex and much more concentrated than that. This 3.70% move today is less about the global macro picture and more about the market's minute-by-minute recalculation of political, financial, and legal odds stacked on one single project. This isn't a diversified materials company. This isn't even a company with active sales. This is, following the recent corporate separation, a pure high-stakes wager on one of the largest and most controversial mining projects in the United States, Thacker Pass in Nevada. The expectation is that you are buying a simple commodity play. The reality is that you are buying a binary event security that hinges on engineering, legal rulings, and massive government financing. Let's be very clear about what this company is, because many investors using online investing platforms, perhaps even some SoFi Invest users, might still be confusing it with the old Lithium Americas or confusing it with a producer. The company executed a separation just last year, spinning off its operational, cash-flowing Argentine assets, the Cauchery-Olaroz project, into a new entity. What remains as LAC is a development stage company. Its sole purpose is to build and operate Thacker Pass. This focus is both its greatest strength and its most terrifying risk. Unlike Apple stock or Nvidia stock, which have multiple product lines and global revenue streams, LAC has one shot to get this right. The company has zero revenue. Its value is entirely based on the perceived net present value of the lithium it hopes to extract, starting years from now. So when we see a move like 3.70% today, we have to ask what's driving it. It's not earnings, there are none. It's not a product launch. It's sentiment and catalyst watching. The trading volume today appears to be tracking along with its recent averages, suggesting this isn't a massive institutional rush, but rather a steady risk-on sentiment trickling back into the beaten-down junior mining sector. These stocks are high beta, meaning they move more dramatically than the broader market. When the S&P 500 is up slightly and commodity-related sectors feel a tailwind, a stock like LAC can easily pop 3 or 4% on air. Conversely, a bad headline can send it down 10%. This is the life of a pre-revenue story stock, a favorite for self-investing traders on platforms like Interactive Brokers who thrive on that volatility. The entire narrative for LAC rests on two pillars: financing and permitting. The first and arguably most important pillar is the financing. Thacker Pass is an astronomically expensive project. We're talking about billions of dollars just for Phase 1 construction. The company already secured a massive $650 million cornerstone investment from General Motors, which was a huge vote of confidence. GM needs that lithium to be IRA compliant, Inflation Reduction Act, for its EV tax credits, so it has a vested interest in seeing Thacker Pass succeed. But that $650 million, while substantial, is just the down payment. The real linchpin, the event the entire market is waiting for, is the finalization of the conditional commitment for a massive loan from the U.S. Department of Energy, DOE, under the Advanced Technology Vehicles Manufacturing Program. We're talking about a loan that could potentially be north of $2 billion. This DOE loan is the definition of a binary event. If and when that loan is finalized and the funds are secured, it de-risks the entire project from a capital perspective. It provides the financial firepower to move from spreadsheets and site preparation to full-blown construction of the mine and the crucial sulfuric acid plant. Any news, any rumor, any government press release that even hints at progress on that DOE loan will send this stock flying. It's possible today's 3.70 drift is partially built on hope that this news is imminent. The expectation is that government money is a sure thing. The reality is that conditional commitment involves navigating an ocean of bureaucratic red tape, environmental reviews, and technical sign-offs. It is not guaranteed until the check is cashed. The second pillar is the legal and environmental permitting. This is where the story gets incredibly contentious. Thacker Pass has faced relentless legal challenges from environmental groups and several Native American tribes. The opposition argues that the project will destroy critical habitats, sacred cultural sites, and contaminate groundwater. So far, Lithium Americas has successfully navigated this minefield. The key 9th U.S. Circuit Court of Appeals ruling largely upheld the Bureau of Land Management's decision to approve the project. But the legal fights are not entirely over. These challenges serve one primary purpose: delay. Every month the project is tied up in court is another month of escalating costs, pushing back the timeline to first production. For a company with no income, time is the most expensive commodity of all. This is why comparing LAC to a stable investment in, say, Fidelity ETFs or Fidelity mutual funds is a category error. Those are instruments for wealth preservation and steady growth, perhaps managed in a Fidelity Wealth Management account or a Schwab Intelligent Portfolios robo-advisor. LAC is the polar opposite. It is speculative capital. It's a position you take in an individual brokerage account, perhaps on the Interactive Brokers trading platform, where you have access to complex order types to manage your risk, or as a small speculative slice of a Robinhood Investments portfolio. It's a bet that the company can navigate the courts, secure the DOE loan, and execute one of the most complex mining construction projects in North America, all while the price of lithium carbonate doesn't crash back to its cyclical lows. This is the kind of detail that gets lost in the simple buy EVs narrative. When you invest online, especially in high-risk sectors, you need real investment help and analysis, not just headlines. You need to understand what you own. With LAC, you own a piece of a project that aims to produce 40,000 tons per annum of battery-grade lithium carbonate in its first phase, potentially doubling to 80,000 tons in phase 2. This would make it the largest lithium source in the United States, a hugely strategic asset for securing a domestic supply chain that is not reliant on China. This is the geopolitical angle, and it's the entire reason the DOE and GM are at the table. The Inflation Reduction Act is a massive tailwind, providing tax credits like 45X for domestic production, which fundamentally improves the project's bottom line, if it gets built. So, where does that leave an investor looking at today's 3.70 gain? It's noise, but it's positive noise. The stock has been beaten down from its highs and it's trying to build a base. The real test isn't today. The real tests are: 1. The final signature on the DOE loan documents. This is catalyst number 1. 2. The commencement of major construction and the company's ability to hit timelines and, crucially, stay within its capital budget. Cost overruns are the bane of mining projects. 3. The stabilization and recovery of lithium carbonate prices to a level that ensures healthy margins for a new, capital-intensive clay operation. I want you all to think about that financing risk. It is the single most important factor right now. Comment below. Do you believe the Department of Energy will finalize this massive loan for Thacker Pass before the end of this year? Or do you think bureaucratic hurdles and political wins will drag this out well into 2026? Let me know what you think. Looking forward, the expectation for Lithium Americas is that it becomes a cornerstone of the American EV supply chain, a pure play bet that prints value for a decade. The reality is that it's a multi-billion-dollar construction project funded by debt and equity, fighting legal battles, with its success tied to a volatile commodity price and a single asset. The risk is not diversified away. You can't just put this into your Fidelity IRA's account and forget about it for 20 years like you could an S&P 500 index fund. This is an active, story-driven stock that requires constant monitoring. You'd be checking it on your SoFi trading platform or Fidelity trading platform weekly, if not daily, watching for news on the loan and legal rulings. In summary, that 3.70 move to $6.72 is a welcome sign of life. It reflects a market that is, for today at least, willing to bet on the upside. The market's expectation is often focused on the Tesla stock story, the soaring demand for EVs. But the reality of this stock is a far more granular, tense, and uncertain drama. It's a story of financing, law, and engineering. The potential upside is undeniable if they pull it off. Thacker Pass is a world